Hi everyone and welcome to episode 2 of Coffee with Cheese. I'm your host Narciso Bomben. Now before we get into this week's topic, I just wanted to say a big thank you to all those that watched last week, took the time to comment and provide a lot of positive feedback. For this week, I wanted to focus on year-end financial tips. And to do that, I'm going to take some key lessons that I took from an article that I posted in my newsletter last week. So first area I wanted to discuss was all around taxable income and tax credits. There are a couple of areas to consider. And I should say that in this area, planning should happen throughout the course of the year, not just at the end of the year. But if you're in a position where you realized a capital gain earlier in the year, whether it be from selling real estate or selling from an investment portfolio, there may be an opportunity to lower that taxable gain. If you have any realized losses from a previous year, that's a great place to start. Also, if your current non-registered investment portfolio has any losses that you may be able to take strategically, and by that I mean talking to your advisor about, that's a good approach to take. Another one is around deferring gains in income. So let me explain this. You may have a job where you get paid a bonus at the end of the year. If there's an opportunity to defer it into 2021, and you think the following year may not be as big a year income-wise as this current year, which during COVID may be unique, but nonetheless a potential opportunity, then you should consider it. Another one is if you're planning to realize a gain towards the end of the year, maybe, just maybe consider realizing it in early 2021. That way any taxes owing wouldn't be owed to the CRA until the following calendar year, 2022. Lastly, charitable donations is an important area where you can benefit from some tax credits. I know 2020 has been a tough year with COVID, but if you're in a position where you like to give to charity, your income hasn't been impacted, maybe you're spending a little bit in terms of expenses, giving a donation at the end of the year before the calendar year is over is certainly going to help your tax bill in 2020. The second area I wanted to discuss was around investment accounts. There's a couple of different investment accounts you should be aware of. Tax-free savings account, most of us are aware of it and know how it works. I wanted to remind you when it comes to withdrawals, any withdrawal you make from your TFSA can go back in dollar for dollar the next calendar year. So if you're considering maybe early next year a withdrawal to pay for some holiday gifts and presents, then maybe consider making that withdrawal late in 2020. That way you'll get all of that room back the following year, okay? The other one has to do with mutual funds specifically and mutual fund investing in a non-registered investment account. Most mutual funds will pay a distribution towards the end of the year, and you just need to be careful that if you have money that you're going to invest, making sure you talk to your advisor around this distribution date and whether it makes sense to do the investment now or wait until after the distribution date. There is some tax planning that goes around with that, and you need to be careful about that. Now, the third area I wanted to wrap up with is around some of the COVID-related measures that the government put out earlier in the year. The first one was CERB, or CERB. If you or your family member took advantage of this, it's just a reminder that this is taxable income. The government did not withhold any tax on this. So you are going to owe taxes into 2021 when you file your taxes for 2020. And if you earned other taxable income this year, it's going to be added to your marginal tax rate. So depending on how much other income you earn, you could have little to no marginal tax or a much higher marginal tax rate. So just be cognizant of this and do some planning for it from a cash flow perspective. Lastly, I wanted to talk about RRIFs and LIFs, Registered Retirement Income Funds and Life Income Funds. If you or a family member or loved one that you take care of their finances for have one of these accounts, earlier in the year, the government allowed the minimums to be reduced by 25%. Now, I must remind you that if the minimums have already been taken out, you can't make this change. But in my experience, a lot of individuals leave their RRIF minimum to the end of the year, maybe middle to end of December. If this is the case and you want to reduce the minimum by 25%, talk to your advisor about this. It's very important. So that's everything I wanted to share with you today. In closing, I wanted to say, please reach out, leave any comments, share any feedback. It'd be my pleasure to respond. Also, if there's a topic you want me to discuss in the future, please reach out and let me know. I'll be happy to discuss it. A couple of things I also wanted to remind you of is I mentioned the newsletter earlier. If this is something you want to try, send me a message directly and I'd be happy to add you to the list. And for those of you that are 5 to 10 years away from retirement, or just can't stop thinking about retirement, I have my next webinar scheduled for Tuesday, December 15th at 12 p.m. Eastern Standard Time called Master Your Retirement. Let me know. I'll be sure to send you the link to join the webinar. Again, thanks for watching Coffee with Cheese and have a great rest of the week.